Hello and welcome to the September 7th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Bowley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are taking a look at an index, the Semiconductor Index. At StockCharts you can find it under $SOX. The semiconductors are a rather influential industry group within the technology sector. As the economy improves, or as the market anticipates the economy improving, we generally see outperformance by the semiconductor index. When we take a look at what's happened, though, and what's transpired throughout most of 2010, you can see that the semiconductors had put in a low back in early February and then made a big run up into April. The first pullback in that run-up came back down to about the 330 level. And over the course of the next several months, you can see that the semiconductors, every time we broke below this 330, 332 area on an intraday basis, we managed to come back up and hold on to it. And if my memory serves me correctly, there were about 10 tests of this line before we finally broke down. We gapped down, actually closed just below it, down at 330. In second week of August, gapped down. We came back up and tested at one time and then fell back down to the 2010 lows that we saw earlier last week. Now, we did finish very strongly last week, had a good week on the semiconductors, especially the last few days. As you can see, a big move up. But notice the high on Friday went right to the 330 level, 331 almost. So the level that was such a key support level for many months now is a pretty big resistance level, and we've already failed there once back in mid-August. So if the market truly wants to get healthy in the near term, one of the first things that's going to happen is we're going to need to get a breakout here with the semiconductors. Now, if we do get a break and a close above 332, it's not like it's going to be a piece of cake from that point forward, because I've highlighted the gap resistance that is going to be very formidable as well. The bottom of the gap resistance came back in the second week of August when we gapped down to about 336, 337, and then continued selling off. So getting to the bottom of this gap resistance is going to be difficult. And then even if we were to get through there, we've got the 50-day moving average at 341, and we've got gap resistance on the other side around 345. So you can see that there's a confluence of resistance on the semiconductors, and as a result, if we can make a move up and take out all of these various levels, clearly that would be bullish for the overall market. I think with the way the market's set up and with the intermediate term downtrend still in play, I wouldn't go into this market on the long side assuming it's going to happen. We need to see it first. On a relative basis, you can see that the semiconductors really started underperforming badly back in mid-July, and the market was trying to make the breakout. If you remember, the S&P 500 was trying to break out back in early August. We had 7 consecutive days where the intraday high on the S&P 500 was between 1120 and 1130, and we were trying to break above 1131. But notice, while the market was up in early August trying to make this breakout, look at what was happening to the semiconductors. Semiconductors were falling apart, and on a relative basis we were losing strength there. This is one of those signs that pointed to potentially more problems for the overall market. It was one of many signs. But now, as we start to rebound and we're starting to show a little bit of relative strength in the semis, it's going to be very important to start taking out some of these key relative resistance levels. The first one is going to be right up here at about this 0.30 area. We finished at 0.298 on Friday, so that's going to be a key area. Also, if the semiconductors do show some additional near-term support, or near-term strength, take a look at what's happened the last 3 times the RSI has approached 60 during this intermediate term downtrend. The black arrows correspond to some significant tops that have taken place when the RSI hits 60. Now, we're only at 49, but again, if we take another move to the upside and get close to that RSI 60, it's going to be a difficult area for the semis to get through. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.